Why is Singapore buying so much gold in 2025? The real truth revealed. In 2025, headlines across financial media and social platforms have been buzzing with a single question. Why is Singapore buying so much gold? Some analysts claim it's a sign of de-dollarization, others say it's about national security, while a few argue it's just smart investing during uncertain times. But when we look beyond the headlines, the truth reveals something more intricate. A nation quietly reshaping its financial identity in a shifting global economy. The numbers tell a different story. Let's start with the data itself, because numbers often cut through speculation. Contrary to the viral claim that Singapore is aggressively hoarding gold, official figures tell a slightly different story. By mid-2025, Singapore's official gold reserves actually declined, dropping from roughly 215 tons in early 2025 to about 204 tons by mid-year. On the surface, this looks like a sale, not a buying spree. In fact, for a few months, Singapore was even listed as the largest net seller of gold among central banks, trimming around 5 tons. However, this doesn't mean Singapore is abandoning gold. The decline in reserves doesn't reflect falling interest. It signals a strategic repositioning. At the same time, domestic and private gold demand within Singapore has surged dramatically. Gold bar and coin sales among investors rose nearly 40% in the second quarter of 2025, even as jewelry demand waned. This contrast, declining national reserves but soaring local demand, tells us something important. Singapore isn't trying to hoard gold behind closed doors. It's trying to build a gold economy. Singapore's quiet rise as a gold powerhouse. To understand what's happening, we need to see Singapore's strategy beyond its reserve books. For years, the city-state has been positioning itself as Asia's premier gold trading and storage hub, a role once dominated by London and New York. This strategy includes new futures contracts that allow physical gold delivery within Singapore, massive investment in secure vaulting infrastructure, and supportive regulations to attract global bullion players. The idea is simple but powerful. If Asia is becoming the world's biggest consumer of gold, then Singapore should be the place where that gold moves, trades, and settles. Rather than hoarding gold inside its central bank vaults, Singapore wants to control the flow of gold, to become the place where price discovery happens, where contracts are cleared, and where investors feel safe parking their assets. This ambition has geopolitical weight too. The global gold market has long been dominated by Western financial systems. By offering an alternative center in Asia, Singapore subtly shifts the balance of financial influence eastward, aligning itself with the growing power of the region's economies. A shift in global strategy from holding gold to owning the infrastructure. Central banks and sovereign investors have learned that owning gold is useful, but owning the system around gold can be even more valuable. Singapore's government and monetary authority seem to understand this better than most. By building an advanced infrastructure for trading, refining, and storing gold, the country positions itself as the gateway for Asia's gold trade. This doesn't just bring prestige, it brings revenue, control, and resilience. In simple terms, other nations are busy stacking gold. Singapore is building the house everyone wants to store it in. This approach also fits Singapore's broader economic DNA. Small landmass, limited natural resources, but exceptional financial sophistication. Gold infrastructure gives it another pillar of global influence, similar to how its ports dominate trade and its banks dominate regional finance. Global context. Why 2025 became a gold year. Singapore's timing isn't random. The year 2025 has seen record-breaking gold prices, soaring above $4,000 per ounce as investors flee to safe assets. Several factors triggered this rally. Growing anxiety about U.S. debt levels and the sustainability of government spending. Inflationary pressures that have persisted longer than expected despite interest rate hikes. Geopolitical instability, from conflicts to trade tensions, pushing investors towards stable stores of value. De-dollarization trends with multiple central banks reducing their reliance on the US dollar for reserves. Gold, historically viewed as the ultimate haven, has become the preferred choice not just for individuals, but for institutions and even countries seeking independence from the dollar system. Amid this surge, Singapore's involvement in the gold market, whether as a buyer, trader, or hub, automatically draws attention. Many observers conflate the growth of Singapore's gold market infrastructure and private demand with central bank purchases, leading to misconceptions about the scale of national accumulation. Why Singapore still values gold? Even though Singapore reduced its official holdings slightly, gold remains a core strategic asset for the nation. There are several reasons for this. 1. Financial insurance. Gold provides a hedge against systemic risks, inflation, currency collapse, or a global financial shock. In a world where even the biggest economies are drowning in debt, gold offers Singapore an independent line of defense. 2. Neutrality and stability. Singapore prides itself on neutrality. Gold, unlike foreign currency reserves, isn't tied to any particular country's policy. It strengthens Singapore's position as a stable, trusted player in international finance. 3. Long-term wealth preservation. Gold doesn't yield interest, but it doesn't default either. It's a timeless form of wealth preservation, a perfect fit for Singapore's conservative and forward-thinking financial strategy. 4. Regional leadership. Owning and managing gold in Asia's heart gives Singapore both symbolic and real power. It establishes the nation as a trustworthy steward of value for regional investors, the private sector's gold rush. While the government's gold strategy is nuanced, Singapore's private sector has gone all in. Investors, family offices, and high net worth individuals have been accumulating gold aggressively. There are several drivers behind this trend. Wealth protection. In an era of digital currencies, market volatility, and high inflation, physical gold offers tangible safety. Singapore's tax policy. Gold traded for investment purposes is exempt from goods and services tax, GST, making it an attractive asset class. Secure storage facilities. The city-state hosts world-class vaults operated by global bullion companies, attracting not only locals, but international investors. Currency diversification. With global uncertainty rising, Singapore's elite investors view gold as a way to diversify away from dollar and euro exposure. This surge in private demand feeds the narrative that Singapore is buying gold, even though much of it is individual and institutional rather than central bank driven. What it means for the world. Singapore's rise as a gold power has implications far beyond its borders. 1. A new gold hub for Asia. By creating a transparent, well-regulated market, Singapore could shift regional gold pricing away from London and New York toward Asia. 2. De-dollarization support.